World and business leaders are gathering in Dubai today as the United Nations kicks off its annual climate change conference. COP28 comes at the end of what is expected to be the hottest year on record, with countries still well off track when it comes to meeting their goals to avert a climate catastrophe. Financing that clean energy transition sure to be a key topic as countries most affected by climate change call on the world's largest greenhouse gas emitters to pay up. Our next guest is leading an effort to accelerate some of that funding. Dr. Andrew Steer is the president and CEO of the Bezos Earth Fund, and he joins us from Dubai today. Andrew, it's good to talk to you. Thanks so much for joining us.
Well, thank you, Aki.
Certainly a lot of skepticism going into this particular COP, largely because it is one of the biggest oil producers that's actually hosting the conference. What are your expectations going into the next 2 weeks?
Well, look, this is a very, very important set of negotiations and set of deal makings, really. This is the first time in history that the world has taken stock of where they are in terms of their commitments. And the so-called stock take came out in September. It's a very gloomy picture. As you said, we're way off track. And so things are very, very worrying. And of course, there's lots of political noise always around a COP. But once you get going, it's surprising what can happen. And, there's sort of two strands. There's sort of what are the negotiators doing? And then what's actually going on outside? What are the big initiatives that are being supported? And so we're involved in both.
Climate financing is certainly going to be a big focus. It has been a focus for some time. The question being, if it is the most developed countries that have been responsible for climate change, why is it that the most developing countries are the ones that are having to pay up for this transition? What has actually shifted in this conversation since the last COP?
Well, look, it's obvious that since way back at the famous Copenhagen COP, way back in 2009, the rich countries promised to provide $100 billion a year from 2020 onwards. Looks like that's now been delivered. Not entirely clear, but actually that's not the point. $100 billion is nowhere near enough. We need over $4 trillion in order to get the transition going. That's a tripling of what we have now. And for middle income and lower income countries, if you exclude China, which is a case by itself, the expenditures need to increase sevenfold on green investments by 2030. So there's a massive problem. And of course, at the same time, interest rates haven't come down the extent that had been hoped for. Public purses are much thinner in both rich countries and in poor countries. Indebtedness is rising. So it is a difficult time. And that's why we've got to think of really innovative approaches, including carbon market money, but also other really interesting initiatives will be floated in the next 2 weeks here.
You've been working closely with the Rockefeller Foundation, with the State Department, to set up what you've described as this Energy Transition Accelerator, ETA. Talk me through how this is going to help get some of that funding off the ground for these projects you've highlighted.
Well, at the moment, there's a lot of private money that would be willing to come in to invest in renewable energy or even decarbonizing existing energy systems, investing in utility and grids and so on. But actually, some of these environments are quite risky and some of the things are not quite profitable enough. And if you've got a country like Vietnam that's switching away from coal towards, let's say, offshore wind, that actually is more expensive. And so what we need to do is find some sort of grant or subsidized money that will take the first loss, for example. And so that's in a way what we're looking at. And we've come to the conclusion that actually carbon markets can play a very important role. If you take the so-called the just energy transition packages, which are packages that the G7 has done for South Africa, Indonesia, Vietnam, and doing for some other ones, essentially they've committed financial resources to those countries, and the deal is those countries will move towards much cleaner energy. The problem is that the commitments that G7 countries make on behalf of their private sector and on behalf of their own governments, it's actually very hard to find that money coming through, quite frankly, now, given how tight things are. And so what we're trying to do is to mobilize carbon market money that would come from Western and host country corporations who already are decarbonizing their own systems internally, but they want to go further. They want to, for example, decarbonize their scope 3, which is their entire supply chain. They want to be accountable for that. So they're willing to put money into carbon markets. And so what we're going to do is try and bring that money to the energy systems. And we actually see several $1 billion potentially on the table for that. And so what we're going to be doing is together with some host countries that will be announced on Sunday, together with some corporations that are willing to come in, and also very importantly, together with the standard setting organizations that are setting the rules of carbon markets, both on the supply and the demand side.
Policymakers have always been at the table at these conferences, but increasingly we have seen the private sector business leaders coming in. Is the interest still there? When you think about some of the biggest companies who have made these set these goals for net zero, I mean, do they still see the opportunity in climate investing, climate financing? What are you seeing in your conversations, or what are you hearing in your conversations?
Well, there's always ups and downs in this. There was a time like 2 years ago when companies really, really got on fire on the notion of committing to net zero. And that's when the Global Financial Alliance was created, is where several thousand companies are committed to net zero, to science-based targets. Most of those are going well. And quite honestly, without the corporate sector, without the private financial sector, we would not be anywhere close to where we are. We probably wouldn't have had a Paris deal, actually. We certainly wouldn't have had the successful Glasgow meeting 2 years ago. However, having said that, it is absolutely true that having made a commitment, a well-intentioned commitment, some companies are actually finding it's harder than we thought. And that's entirely legitimate because it is difficult. And so we're now in a sort of a much more realistic, it's not Friday night, it's Tuesday morning, and actually it's hard. There's grind to be done. But the really exciting thing is that actually they're going forward, most of them. Not all. You've obviously seen a lot of criticisms of greenwash. You've seen, a certain, conservative politicians saying all of this is woke capitalism in the United States. Well, it isn't. It's actually the future of the world. So to call it woke capitalism is just plain nuts. It's tomorrow's economics. It's a much better world. And actually to see these CEOs coming to the table, I mean, there will be, I'm sure there's well over 1,000 of them here in Dubai. I don't know that, but I'll bet that is the case, working very, very hard, very committed. So I take my hat off to them. It is not easy, and not all of them are serious, and there is greenwashing. But without these private investors taking things seriously, we would not be able to succeed.